On today's edition of Women and Money Montreal, our topic is how do mortgage rates go up and down? And to really get how mortgage rates move, it's really important to understand the difference between variable rate and fixed rate mortgages. Today, I'm going to break it down. I'm going to break down today's session in 4 parts. Number 1, I'm going to talk about the role of the Bank of Canada. Number 2, I'm going to touch on the differences between variable and fixed rate mortgages. Number 3, I'm going to talk about bond yields, what they are, and how they affect mortgage rates. And number 4, what to do if you are on the market for purchasing a home or if you have a mortgage that's up for renewal. So let's start with number 1. Number 1 is, what is the role of the Bank of Canada? And to be quite honest, and maybe some of you out there will agree, I don't think the general public really even cared about the Bank of Canada prior to last year. So the Bank of Canada is Canada's central bank. Every developed country has a central bank. So it's basically the government organization who is in charge of the flow of money in the country. They're not an actual bank, but in Canada, they're called the Bank of Canada. In the US, you may have heard that they're called the Federal Reserve. In England, they're called the Bank of England. So again, they are the government body that controls the flow of money, controls inflation, controls rates in their country. So here in Canada, the Bank of Canada does 8 rate announcements a year, and that dictates whether any variable rate loan, if the rates are going to go up or they're going to go down. So we just had the last rate announcement last week, and the next rate announcement is going to be in December. So these announcements directly affect anybody who has a variable rate loan. So the most popular variable rate loan is the variable rate mortgage loan, but it also affects lines of credit, whether unsecured or secured against a property. It also affects investment loans, and it also affects student loans. So if you have any one of these variable rate loans, those announcements directly affect you and your payments. So if you have a variable rate mortgage and rates go up, chances are that your payments, your interest rate that you're paying is going to go up. If rates stay the same, there probably aren't going to be any changes. If rates go down, then your payments as well as your interest rates will most likely go down. There are some exceptions, especially on the mortgage side, but generally speaking, as a rule of thumb, that's the role of the Bank of Canada when it comes to mortgage rates, and their announcements only directly affect variable rate mortgages. So that brings me to number 2, the difference between variable rate mortgages and fixed rate mortgages. There's this huge misconception that every time the Bank of Canada makes their announcement, it affects all mortgages. And this is simply not true. Once again, I'm going to reiterate, it only directly affects those with variable rate mortgages. Fixed rate mortgages, on the other hand, their rates are directly affected by bond yields. So what the heck is a bond yield? Okay, so bonds are basically loans that are issued by governments or big corporations when they need money. And this is all the time, right? The power of the world and the monies of the world understand that in order to make money, you need to borrow money. So let's pretend I'm the government. Let's pretend I'm the government of Canada. And this is literally what I'm going to explain this, and then you're going to understand what the story is about and how it relates to mortgage, how it relates to mortgages. So let's pretend I am Canada, I'm the government, and we're going through a rough time, and I need Canadians to invest in me in Canada. So I am asking everybody to invest, and in return, I project that I'm going to give you a return of a certain amount. It's not guaranteed, and depending on the government or the corporation that's issuing it, it's never guaranteed, but you have to look at the quality of who the issuer is. So if we're talking about the government of Canada having a pretty stable economy, chances are if you loan or invest in the government of Canada, whatever the projected return is you're probably going to get it back or something close to it. Again, it's not guaranteed, but it's a pretty safe investment. So what does this have to do with mortgage rates? So fixed rate mortgages are directly related to the Government of Canada's bond yields. A yield is an expected return on an investment. So just like the stock market, there's also a bond market. And just like the stock market, the bond market is open Monday to Friday. Why don't we ever talk about the bond market? Because it's not as sexy as the stock market. But you could go online and you could follow the bond market. You see what the bond market opens at, what it closes at. And you could also take a look and see what the 3-year, what the 5-year bond yields are. And if you notice over time that they're either going up, going down, or staying the same, whatever the trend is going to be the trend that affects your fixed rate mortgage, which is why I'm explaining this. Fixed rate mortgages can change at any time. Now, I'm not talking about if you're in the middle of a mortgage term. If you're in the middle of a mortgage term, your rate is going to stay the same within that term. Where it becomes an issue or problematic, or where you might be watching out, is if A, you're thinking of purchasing a property and you're trying to lock in a rate, or B, if you have a mortgage that's up for renewal and you're not sure which rates to take. So just like with the stock market, bond yields, the value of the Government of Canada bond yields could change any day. Every day they go up and down, just like the stock market. So it's impossible to know ahead of time if fixed rate mortgages are going to go up or if they're going to go down. We'll know, as mortgage brokers, we'll know, soon enough, but we don't know if they're going to go up by the end of this week. We don't know if they're going to go up next week, a month from now. We don't know where fixed rates are going to be in January. It's just like asking someone like myself, who's also an advisor, Lynn, what do you think is going to happen with the stock market in general between now and the end of the year? I don't know. We could go based on history. We could go based on what happened towards the end of last quarter. We could go based on what certain industries, what these companies were reporting as earnings. But these are just guesstimates. So again, bond yields, just like the stock market, the yields, the returns could go up and down any day. We cannot guarantee future rates. So if you are on the market to purchase a home and you're in the middle of doing your pre-approval, or you're getting ready to do a pre-approval, it's really important, especially right now, to lock in a rate. So when you lock in, just because you're doing a pre-approval, it doesn't automatically lock in a rate for you. So whoever it is that you're working with, whether it's a mortgage specialist at the bank or a mortgage broker like myself, if you're scared that rates are going to go up, lock in a rate. And the time that you're taking to submit your documents, to sign the documents, to ask all your questions, and I'm not saying don't ask all your questions, but the time that it takes for you to do all of that, from the first discovery call to the time that your pre-approval is submitted, the rate may have changed. Sometimes I have clients who I talk to one day, and by the time I actually get their documents, it's 3 or 4 months later because life happens. Well, in those 3 or 4 months, there could be a huge change in rates. So why is it important to lock in a rate? Because we don't know where rates are going to be. And by locking in a rate, if rates do go up, the lender who locks in the rate for you is contractually obligated to offer you that rate, even if rates have gone up and surpassed that rate. Just a warning in advance though, when you do lock in a rate, it's always going to be a little bit higher than what today's rate is. Now, if between now and the time your rate hold expires, if let's say you have an accepted offer and it's approved and you have the final approval, but at that time rates are lower than what your held rate is, then obviously we're going to go with a lower rate. The point of locking in a rate is to make sure that you secure a rate just in case rates go up. So please, if you're on the market for to buy a home now, it's really important to lock in a rate because we really don't know where fixed rates are going to go. I'll say it again. Just like the stock market, bond yields could go up and down at any time depending on what's going on in the economy. So that's number one. Number two, if your mortgage is up for renewal, it's the same idea. It's the same idea if, depending on what your situation is with your home, depending if you're thinking of refinancing, maybe over the last year, you incurred a lot of consumer debts. You're also thinking of refinancing and taking equity out of your home to pay off some consumer debts. These are all important conversations to have with your mortgage specialist or your mortgage broker. One complaint that I've been hearing a lot is people who need help that they didn't need help with in past years. For the last 20 years, we've pretty much had a stable economy. There really wasn't much when it comes to inflation, but the last year or so have been really, really rough. So a lot of people have gone into debt. There are also people who are purchasing homes or refinancing at low interest rates. With low variable rates, and now they can't sustain the payment. So now a lot of people are in a very precarious situation, and they've never been in a situation before. And a complaint that I've heard is that, I've done business with XYZ Bank and they've been great, but now that I need help as a client, they're not listening to me, or they're not really offering me solutions, or it kind of sounds like they want us to go through the paperwork very quickly. I'm asking really pertinent questions because I've never gone through this. And I just feel that I'm getting brushed off. So if you feel that this is you, because you're up for renewal, you're thinking of refinancing, and you're in a position to restructure your finances, it's really important to work with a professional who takes the time to explain your options to you, to go over the numbers with you. You should never feel pressured to sign on a paper because there's a deadline. However, once again, when it comes to fixed rates, and if your mortgage is up for renewal and you're interested in renewing on a fixed rate, don't forget that fixed rate mortgages, the rates go up and down at any time. So the longer it takes for you to do the preliminary stuff, like actually pick up the phone and call somebody, have that discussion, look over your documents, the paperwork and the numbers, from the initial call to the time you're actually ready to sign and you're comfortable with it, rates may have changed. So it's really important, if you have your renewal coming up, reach out to a mortgage professional who you're comfortable with and who's able to sit down and answer those questions. Same thing when it comes to your mortgage pre-approval. But like I said, because there's so much volatility with rates right now on the fixed rate side, it's important to reach out sooner than later. So I hope I've answered your questions. Like I said, in order to really understand what's going on with rates, it's key to know the difference between variable and fixed rate mortgages and what the differences are. Number one rule, they do not, just because the Bank of Canada makes their announcements, doesn't mean it affects both types of rates. It directly affects the variable rate mortgages. Fixed rate mortgages, it's dependent on bond yields, and you could always look that up online, just like you would with any stock. If you have any mortgage stuff to do, any mortgage transaction to do, pre-approval, purchase, renewal, refinancing, reach out to a mortgage professional who's going to listen to what your situation is and have your best interests at heart. Just like with any other profession, you want to make sure that you're working with someone who really understands your situation and is offering you the best possible solutions. If you have any questions, if there is anything I could assist you with, my contact information is going to be listed at the end of this video. It will be more than my pleasure to help you out.